Hello, crypto champions. Today's Bitcoin ETF news is going to make us a bit happy, and so is Ripple's new partnership with an oil company. I also wanted to say, don't be fooled by bot ads in my comments. I can't prevent them from appearing and block it. It's scam. You will lose your money. Be careful. Let's get started. Bitcoin ETF, BlackRock, Grayscale, Fidelity, and Franklin Templeton meet with SEC. Four of the top applicants for a Bitcoin spot ETF have met with the United States Securities and Exchange Commission, SEC, to iron out technical details regarding the much-awaited product. Bloomberg ETF analyst James Seifert confirmed these meetings, noting that the latest development marks the third time BlackRock will be meeting with the officials from the Division of Trading and Markets. While Seifert said there was not much news to report about the meetings, he rightly observed the presence of the SEC's Division of Corporate Finance, another key unit that can sway the decision for the ETF. One underlying similarity these discussions had in common relates to the listing plans of the Bitcoin ETFs by each applicant's respective stock exchanges. This advancing communication indicates that the SEC is more invested in the applicants and the products than it was in the past. Bitcoin ETF short approval window drawing close. 10 years after the SEC rejected the first attempt to launch a spot Bitcoin ETF, the regulator now faces another major test. Notably, the deadline to give its final verdict on the ARK Invest and 21 Shares joint application is early next year. With pent-up expectations, all eyes are on the SEC as the verdict may either elongate the race in the case of approval or usher in a new era that many investors have been waiting for. The ongoing meetings with the SEC have prompted a number of revisions to the original applications. Tagged as a good omen to meet the SEC's ultimate demands, experts have predicted that should the regulator choose to approve the Bitcoin ETF, it will do so for multiple applications, implication for Bitcoin price. Many market analysts believe that if the SEC ends up approving a spot Bitcoin ETF, the development will usher in massive institutional capital that can shift the price of BTC positively. In an August report, Tom Lee, the head of research and contributor at CNBC, predicted that Bitcoin could soar to $150,000 if the SEC approves a spot Bitcoin ETF. While others have also shared this sentiment in the past, Seifert cautioned against extreme expectations in a recent post on X. He compared the hype to the historical performance of gold, whose ETF has only amassed approximately $95 billion in capital for close to 2 decades since its launch. I view the recent meeting between BlackRock, Grayscale, Fidelity, Franklin Templeton, and the SEC as a pivotal moment in the ongoing narrative of Bitcoin ETFs. The involvement of such significant financial institutions underscores the growing legitimacy and interest in cryptocurrency as an asset class. It's particularly noteworthy that this is BlackRock's third meeting with the SEC's Division of Trading and Markets, signaling a persistent and strategic push towards the realization of a Bitcoin ETF. The presence of the SEC's Division of Corporate Finance in these discussions shouldn't be understated. Their involvement suggests a more holistic and serious consideration of the Bitcoin ETF beyond just the technicalities of trading. This indicates a shift in the SEC's stance compared to a decade ago when the idea of a Bitcoin ETF was first proposed and subsequently rejected. The landscape of cryptocurrency has evolved dramatically since then, with increased mainstream adoption and institutional interest. Regarding the potential impact on Bitcoin's price, the approval of a Bitcoin ETF could indeed be a watershed moment. Institutional capital has long been the white whale of the crypto world, and an ETF would provide a regulated and familiar entry point for these large investors. Tom Lee's prediction of Bitcoin soaring to $150,000 in such a scenario isn't far-fetched when considering the influx of institutional money. However, as James Seifert cautions, we should temper our expectations. The comparison with gold's ETF is apt here. Despite gold being a well-established asset, its ETF took nearly 2 decades to amass $95 billion in capital. The crypto market, known for its volatility and nascent status, might not see an immediate drastic surge even with an ETF. In my view, the key takeaway from these developments is the increasing seriousness with which major financial players and regulatory bodies are treating cryptocurrencies. Whether or not the Bitcoin ETF gets approved in the near term, these discussions represent a significant step forward in the integration of cryptocurrencies into the mainstream financial system. The very fact that we're witnessing a dialogue between industry giants and regulators is a sign of maturity in the crypto space. This ongoing evolution, more than any short-term price movements, is what excites me most about the future of cryptocurrencies. Next news. Ripple ally SBI Group and Saudi Aramco to explore joint digital asset investment. Ripple Labs ally SBI Group and state-owned energy giant Saudi Aramco have entered into a strategic partnership to explore a joint digital asset investment initiative. The news has reverberated into the financial world, triggering positive trends for the crypto ecosystem. The partnership could benefit the crypto and blockchain scene. As a major Ripple partner, SBI Group has a sizable interest in many of the big movers in the crypto world. With the recent partnership, Saudi Aramco might leverage the firm to deepen its foothold in the industry. Details of the SBI Group, Aramco link-up. The deal between the duo will focus on jointly investing in each other's interests as it concerns digital assets and semiconductors. SBI Group and Saudi Aramco will also jointly boost Japanese startups with plans to expand their reach into Saudi Arabia. A new outlet, SBI Middle East, will go live soon to achieve this goal. As a company big on tokenization, speculation abounds that the partnership may revolve around SBI helping Saudi Aramco diversify in this regard. One emphatic move SBI Group has made in its tokenization push is the planned launch of Start, a brokerage platform for tokenized investment contracts, projected to start operations on December 25th. Start will be launched by Osaka Digital Exchange, a firm in which SBI Group holds a majority stake. On the crypto and blockchain front, Saudi Aramco currently has little-known stakes. It, however, invests indirectly in the crypto world through Tiger Global, Andreessen Horowitz, and Blockchain Capital, amongst others. SBI Holdings, a good ally for crypto. With the evolution of the crypto ecosystem thus far, companies like SBI Holdings are helping to integrate crypto solutions to reach more people. As reported earlier, SBI Holdings partnered with Circle to drive USDC integration in Japan. This move complements the launch of a 100 billion yen fund designated to power startups operating at the intersection of Web3 and artificial intelligence. This partnership between Ripple's ally SBI Group and Saudi Aramco is a fascinating development with potentially far-reaching implications for the digital asset landscape. SBI Group's involvement in the crypto sector, particularly through its ties with Ripple, has already established it as a significant player. Now, pairing up with Saudi Aramco, a titan in the energy sector, signifies a noteworthy cross-industry collaboration. The focus on joint investment in digital assets and semiconductors is particularly intriguing. This move could signal a broader trend of traditional heavyweight industries, like energy, exploring the potential of blockchain and digital assets. Saudi Aramco's interest, albeit indirect until now, in the crypto space, could be seen as a strategic move to diversify and modernize its investment portfolio, especially considering the global shift towards digitalization and sustainable energy practices. The establishment of SBI Middle East to facilitate the growth of Japanese startups in Saudi Arabia is another crucial aspect of this partnership. It's an indication of how digital asset ventures are not just about the assets themselves, but also about fostering a broader ecosystem that includes technological innovation and cross-border enterprise growth. This kind of international collaboration is essential for the global acceptance and integration of digital assets. SBI's move into tokenization, especially with the planned launch of Start, aligns well with this partnership. Tokenization can offer a new avenue for assets like those held by Saudi Aramco, potentially unlocking new value and efficiency. It's also a step towards a more integrated global digital asset market. Regarding the broader crypto ecosystem, this partnership could act as a catalyst for more traditional large-scale companies to explore investments in crypto and blockchain technology. The involvement of a company like Saudi Aramco lends a degree of legitimacy and confidence in the crypto market, which can be particularly valuable in attracting more conservative investors. In summary, this partnership between SBI Group and Saudi Aramco represents a significant convergence of traditional and modern financial worlds. It's a strong indication that digital assets are increasingly being viewed as viable, valuable components of diversified investment strategies by some of the world's largest companies. This could lead to more such collaborations, further integrating the crypto world with traditional industries and possibly setting new trends in both investment and technological innovation in the digital asset space. That concludes the news for today. By tradition, let's move on to the market review. Bitcoin first. Since yesterday it reached the upper boundary of imbalance at 43,582, took off short liquidity from there, returned to the middle, rose slightly, and on today's news of the ledger hack, fell and formed a short squeeze, which has already been half bought back. Now we are trading inside the imbalance again. What can I say? It happens with news. There is nothing terrible in it, and there is no need to panic. Growth continues. The falling domination, which reached 0.5 level on Fib, is pleasing. 53% is a good indicator for altcoin growth. Of course, they also sagged a bit on this news, but further opens good prospects. Now let's take a look at XRP. 4-hour time frame, growth up to the resistance level 0.6336 without fixation above, the same squeeze as on Bitcoin and return to almost the same marks. Also, I forgot to say, this short liquidity was taken away. What's next? We have already consolidated above the key level, 0.6204. Now we need to break 0.6336 and go to the next liquidity, up to 0.6513. From there we are likely to see a rebound, after which we will grow further. Then the road to 0.6944 is open. The main thing is not to fall below 0.6204. That's all for now. Don't jump in on the highs and only then will everything work out perfectly. Today we broke down what's happening with the Bitcoin ETF at the moment, what the perspectives are on it, what Ripple's new partnership with Saudi Aramco might bring, and the local market situation. What do you think about it? Will the ETF be approved soon or not? Write about it in the comments. See you in the next videos.